Hello, my name is Muhammad Izzudaira Bemazuki, and I will present for Kawan Food Berhad Company. Kawan Food Berhad is Malaysia's largest manufacturer of Asian food delicacies and a world leader in the automated production of paratha and chapati. The group conducts its business under 5 brands: Kawan, KG Pastry, Vid, Patient Bake, and Aman, with Kawan being the most vital of these. Its signature frozen paratha and chapati products contribute to 60% of the group's over 200 million ringgit in revenue. Kawan Food Sendirian Berhad has received numerous accolades over the years, gaining increasing recognition. Consequently, in 2005, Gan listed his businesses on Bursa Malaysia under the name Kawan Food Berhad. In 2006, Kawan Food Berhad had a market capitalization of 72.8 million ringgit. In 2017, its market capitalization reached 1.1 billion ringgit, a 13.5-fold increase from the 2006 levels. This finally elevates the company to the ranks of the Edge Billion Ringgit Club's other billion ringgit companies. The origins of Kawan Food Berhad can be traced back to the late 1970s when Mr. Gan Tian Chai founded Kian Guan Trading Co. and supplied local grocery stores and supermarkets with traditional and homemade pastries known as kuih bakul and kulit popiah. In 1984, Gan founded Kawan Food Manufacturing, commenced production of ready-to-eat frozen food items.
SPRITZER Berhad is a Malaysian mineral water brand. Lim Kok Chong, aged 76, is the son of impoverished rubber tapers. He rose to establish Malaysia's largest mineral water company in the manufacturing and distributing mineral water, sparkling mineral water, distilled water, fruit-flavored carbonated and non-carbonated drinks. Integrated and largest bottled water company, accounting for more than 40% of the market. And that was the first and only listed on Bursa Malaysia.
It is wholly owned subsidiary Samsung Food Industries Berhad is one of the leading food and beverage ingredients manufacturing companies in the country, started as a caramel producer in 1977. The company manufactures and sells food and beverage ingredients. The products that the company produces are caramel color liquid, caramel powder, glucose syrup, high maltose syrup, maltodextrin, glucose syrup solids, vinegar, and soy protein sauce. The company was listed since 2002 and ascended to the main market of Bursa Malaysia in 2008. The company mainly focuses on Malaysia, Singapore, and other countries. The group's assets and liabilities are mainly located in Malaysia.
Project we are using vertical analysis and also horizontal analysis to compare the changes towards the years. Vertical analysis is a method of analyzing financial statements that lists each line item as a percentage of a base figure within the statements. For horizontal analysis, an approach used to analyze financial statements by comparing specific financial information for a certain accounting period with an information from other periods.
So according to the vertical analysis of Kawan Food Berhad from the reports, Kawan Food Berhad's cash amounts increased from 20.95% in 2017 to 26.44% in 2021. And this is recorded as the highest value cash among the 5 years recorded. Based on the graph, the company's non-current assets started from 2018 until the recent, with an average rate of 86.38% to 73.56%. The company's long-term debt declined as the years go by, which is a good sign because it shows that the company is able to pay off most of its financial obligations and not rely on any outstanding debts. Kawan Food Berhad's share capital was surprisingly high in 2017, but it later decreased from 55.04% to 46.80% in late 2021. According to the annual report of 2021, this is because of the company's poor sales performance. The company's retained earnings are recorded to have increased from 2017 to 2021 from 39.51% to 49.10%. And that is all for the vertical analysis for Kawan Food Berhad.
Presented above, it shows that common size for each items the financial statements of SPRITZER Berhad with total assets, liabilities, and equities as the base item every year. Firstly, we can see the cash changes between the years are not major, within the range of 5% to 7%. Next, second point, which is fixed asset. Starting in the year 2017, we can see that the percentage of fixed asset is 92.94% of the total asset, and in 2018, the percentage has slight increase to 93 to 15%. And the highest percentage is in 2019, which is 94.78% as stated in the financial notes of SPRITZER Berhad. In addition to this, the company was also successfully acquiring a land which is now counted among its fixed asset. Other than that, under liabilities, we can compare the long-term debt over the years. On 2017, the company percentage of long-term debt was 6.06% from the total of liabilities. On 2019 until 2021, we can see that the amount of long-term debt had decreased until 4.35% amounted from the total liabilities. Moreover, based on the graph above, we can see that the changes of share capital towards the years. According to the annual report on 2017, there was 54.04%, and on 2018, it has decreased to 52.45% from the liabilities total. The share capital amount continued to decrease on 2019, 2020, and 2021, which is 49.37%, 46.90%, and 44.76%. This decrease is shown by the graph above green color that causes the line graph to slope downwards. Lastly, for retained earnings, based on the annual report on 2017, the percentage is 39.90% from the total liabilities, and on 2018, it shows that the retained earnings has slight increase to 41.81%. We can see that through the years of 2019, it has increased until 45.30%. This is because SPRITZER Berhad received more income towards 2021, such as profit gain or from capital stock investment and the amount of dividend payouts.
For vertical analysis of 3A company, for this company, their placement in funds is included under the cash. The company's cash is the highest in 2017 at 20.26%. Then in the year 2018, it decreased drastically to 4.52% because the placement of funds in the year 2018 was only RM 1,000. Then the cash increased again in 2019 because the placement of funds increased to RM 35,849,000. Then for 2020, it decreased and then increased again at 2021. Most of the value under cash is put into placement in funds for the company. After that, we can see that fixed asset began to increase as high as 95.48% from 79.74% in 2017. The increase is because property, plants, and equipment were purchased that year. The percentage then ranges between 80% to 89% from 2019 to 2020, with a little increase in 2020. The company's fixed asset increased yearly with just a minor drop. For the company's long-term debt, it peaked in 2017 at 9.68%, then gradually reduced year after year. According to the most recent balance sheet data, 3A Resources Berhad has obligations of RM 46.5 million due within a year and obligations of RM 18.8 million due after that. On the other hand, it had RM 55.6 million in cash and RM 110.5 million in receivables due within a year. As a result, it has RM 100.8 million more liquid assets than the total liabilities. This surplus implies that the company is using debt prudently and conservatively, and it is unlikely to have problems with its lender due to its excellent net asset position. Simply put, the company is having more cash than debt, suggests that it can handle its debt responsibly. For retained earnings, it showed a steady movement but slightly declined from 2017 to 2019 and then increased again from 2020 to 2021. The highest was in 2018 and the lowest was in 2019, and then it rose again in 2020 and onwards. The slight percentage drop in 2019 due to the share premium balance from the previous year amounted to RM 50,687 million following the adoption of CA 2016. The share premium account will be merged with the group's share capital account. So, the group and the company have consolidated the share premium account into a share capital account. As for the share capital, it shows stable movement with only slight decrease and increases from year to year. The highest was in 2019 and the lowest was in 2018. The growth is from the share premium transfer. For overall comparative analysis, we were able to anticipate the business issues that the firms experienced as a direct result of the common size statements that we had completed by looking at the annual report provided by the company each year. Considering the annual assets, we can observe that SPRITZER Berhad retains less cash than COMPARATIVE Berhad and 3A Resources Berhad. It is because they have a high number of cash receipts. However, based on the percentage, we can see that all three of these companies experienced a decrease in cash throughout the 2018. Next, on fixed assets, we will compare 3 recent years. For 3A Berhad, we can see that in 2019, the percentage for fixed asset is 81.51% and will increase to 89.12% in 2020. However, in 2021, the fixed assets started to decline to 80.35% of the total assets. And then for Kawan Food Berhad, the percentage in 2019 is 83.81% and continued to decrease in 2020 and 2021, resulting in 76.23% and 73.56%. For SPRITZER Berhad, in 2018 it was 94.78%, followed by 2020 by 93.69%, and 2021 amounted to 93.69%. These three companies' fixed asset decreased yearly on their fixed asset accepted by 3A Resources Berhad, which slightly increased in 2020. For that, moreover, for the long-term debt of these companies, there are a few items that will affect the company's performance on their liabilities. The data we calculated from the annual report shows that Kawan Food Berhad is holding a smaller percentage of long-term debt, which in 2020 amounted to 4.15% and decreased in 2021 to 4.10%. And then next, for SPRITZER Berhad's long-term debt increased from 3.84% in 2020 and to 4.35% in 2021. This shows that there is an additional loan in 2021 for SPRITZER Berhad. And then for 3A Resources Berhad, in 2020 shows 5.38% over the total liabilities and decreased to 4.49% in 2021. From that, this shows that in 2021, Spritzer will rely more on long-term debt than the other two companies. Other than that, in part under equity, we will find share capital and retained earnings, which may be compared between the firms. According to the statistics that we gathered and analyzed, it reveals that Kawan Food Berhad will continue to rise from 2019 until 2021. And then Spritzer Berhad saw an improvement in its retained earnings from 2019 to 2021. The growth for THREE-AAA Resources Berhad on theirs too on 2019 to 2021, and it took place over those years. Compared to Kawan Food Berhad and Spritzer Berhad, THREE-AAA Resources Berhad has the largest percentage of their retained earnings in its possession. Lastly, a look at Kawan Food Berhad's share capital from 2019 until 2021 reveals that they have fallen over those 3 years. This might be because the corporation has repurchased some of its share or because its capital has been reduced. The share capitals of Spritzer Berhad will also decline from 2019. The global epidemic is to blame for the recent drop in share prices, which was triggered. Additionally, THREE-AAA Resources Berhad share capital increased from 2019 to 2020. Overall, it can be seen that THREE-AAA Resources Berhad has a somewhat lower shares of 4.11% capital compared to Spritzer Berhad and Kawan Food Berhad. This is the case when comparing all three of these firms.
In conclusion, we were able to conclude that among these three companies, Spritzer Berhad is the one that shows the most progressive performance. This is due to the fact that the company has the highest value of fixed assets owned, are sufficient to pay its needs and financial obligations. Moreover, the company has a reasonable amount of debt by 2021. The assets will be enough to sell and be used by the company to generate sales and provide services in the frozen food industry. Now let us move on to the horizontal analysis. Kawan Food Berhad's sales or revenue has shown a major increase from 2017 to 2021, with 2017 being the base year. It increases by 28.27% amongst the 5 years recorded. The company's cost of goods sold shows a steady increase yearly from 2017 with a base of 100% to 2021 with 143.90%. Next, we will discuss the company's total operating expenses. For Kawan Food Berhad, the index numbers have shown that there is an increase gradually over the years. Based on the annual report, poor occupational health and safety hazard will increase the total operating expenses due to injuries and whatnot. This is the reason why the company has had a major increase for the total operating expenses. The company's earnings before tax and interest, aka EBIT, show a slump or decrease over the years before rising in the 4th and 5th year. The data reveal it started with 100% in 2017 and reduced to 81.12% in 2018. In 2019, it decreased to 42.59% before it increases to 88.21% in 2020. In 2021, it is recorded to be 101.67%. Lastly, the EAT, also known as earnings after tax. The base year in 2017 of course starts with 100%. A year later, in 2018, it decreased to 78.36%. After that, in 2019, it started to decrease more, going down to 41.28%. When 2020 hit, the records improved. There was an increase of 16.64% before another increase in 2021, summing up a total to 109.20%. This shows that the company was able to catch up and improve its revenue in order to gain more profits after the losses they have had.
In the table above for the purpose of doing research into the index number trend for sales revenue from 2017 to 2021. According to the graph, the sales and revenue graph increased from 2017 to 2019. However, the amount decreased in 2020. This is mostly due to the COVID-19 since demand for the product is declining owing to the high number of lockdowns being implemented to the combat of pandemic. On 2021, there is a slight increase in the sales amount as the economy is starting to recover from the pandemic. Next, for the cost of goods sold in 2017 through 2018 has increased, but it has begun to fall since then and will continue to do so until 2020. On 2021, there is a slight increase of COGS on 20.05%. This means due to the increasing of manpower and also a substantial increase in demand of their products on the year. The overall operating costs or expenses incurred by Spritzer Berhad, which are often referred as selling at general and administrative costs. There are other running costs that the firm is required to pay, such as depreciation of the plant, property and equipment that is utilized in the manufacturing process of their products. Operational expenditure indicates the significant increase up until the year 2020 when they reach the peak level on the line graph, which depicts a percentage of 152.80%. This level was attained. This is due to the fact that in the year 2020, they had acquired a new plant, land and equipment, which brought the total cost to an extra 26.2 million. Lastly, for the last column of the chart shown above reflects earning after tax, also known as EAT. It is reveals that SPRITZER Berhad EAT on 2019, it started to climb to 122.65% because on that year, it had bigger gain from foreign exchange compared to the earlier years. This caused the rate to start climbing on 2019. By the year 2020, it had already begun to drop to 95%. The fall may have been caused by the increased cost of utilities and labor. A little rise was seen in 2021, bringing that the total percentage to 95.14% for the year in. That's all for SPRITZER comparative analysis. I will pass to 3A resources Berhad.
For horizontal analysis of 3A Resources Berhad Company, the table and chart above present a 5-year summary of 3A Resources Berhad financial performance from 2017 to 2021. The year 2017 is chosen as the base and the percentage is set to 100% to indicate a percentage of the base year. For revenue, the company revenue growth is the highest in the year 2021, followed by the second highest that can be seen in the year 2018. In the year 2019, the company's revenue had a slight decrease compared to 2018 revenue. Overall, even though multiple movement control orders were implemented last year, the company saw a resurgence of confidence from its customers. This translated to the company having recorded its best ever annual revenue and profits as both grew by double digits in the year 2021. For cost of goods sold, the highest can be seen in the year 2021, followed by the second highest in the year 2018. Then it declines in 2019 and 2020, with the reason being that fewer inventory purchases are made during the year. Next, the index trend for total operating expenses of the 3A company remains stable, ranging from 91% to 100%. The highest was in the year 2017, and the second highest was in the year 2021. The decrease that happened in the year 2018 is due to no realized and unrealized foreign exchange loss in that year. For earnings before interest and tax (EBIT), similarly, the highest index trend is in the year 2021. For 3A Resources Berhad, it is worth considering how well the company converts its earning before interest and tax to free cash flow, as this may influence both the company's need for and capacity to manage debt. 3A Resources Berhad generated free cash flow worth 75% of its EBIT over the last 3 years, which is about average given that free cash flow includes interest and tax. This means it can pay off its debt whenever it wants. And lastly, for earnings after tax, the highest index trend can be seen in the year 2021. Earnings after tax for the company have kept on increasing since the year 2018. However, there is a 30% drop in earnings after tax in 2018 compared to 2017. According to the annual report, the drop happened because the spike in raw materials costs for their products beginning from the last quarter of 2017 and continuing into the year 2018 was the most severe ever experienced in about the last 5 years. From the analysis of the index number trend for 5 consecutive years from 2017 to 2021 for 3 companies, which are Kawan Berhad, SPRITZER Berhad, and 3A Resources Berhad, we can see that 3A Resources Berhad company is the most stable overall in financial management among the 3 companies. It was due to the consistent and steady movement of its index number trend. And also, it can be seen that, especially for Kawan Berhad and SPRITZER Berhad, their index number trend for the 5 items that we choose to analyze is not all the highest in 2021, which is vice versa for 3A Resources Berhad, which is increasing in 2021 for all items. For Kawan Berhad, we can see that it has the lowest value of revenue among the 2 companies. And so far, between SPRITZER Berhad and Kawan Berhad companies, SPRITZER Berhad is preferred. And in summary, based on the data from the horizontal analysis, SPRITZER Berhad seems suitable to be invested in for the long term since it is stable, consistent, and steady. For 3A Resources Berhad and Kawan Berhad, it is suitable to be invested in either the short term, intermediate, or long term since the trend value of the index number trends of earning before interest, tax, and earnings after tax is promising.
In a nutshell, based on all the observations that we have made and all the analysis that we have done, it is certain that 3A Resources Berhad has successfully proved to us that it has the best performance amongst the 3 companies written. This is based primarily on its index number and horizontal analysis. The reason is because the company's profits before interest and tax, and also the profits for after taxes, have shown the best scores in the latest edition, 111.76% respectively, while Kawan Berhad and SPRITZER Berhad gained 101.67%, 109.20%, 86.03%, and 95.14% respectively. SPRITZER Berhad has shown to hold the lowest values for EBIT and EAT. And that is all from me. Thank you.